Now we are going to discuss about the option trading rules. Before learning the options, we'll learn about some rules. I will tell you important rule. Okay, please note down. Most important rule of options. Okay, gamma and theta is equals to Vasco di Gama. Quite funny, right? Okay, I just joking. Because many people are thinking that option, delta, gamma, theta, I need to look which one I need to look after. Okay, people will confuse like this. Okay, never ever confuse with this option. Those are not for us. Okay, these are all only for maybe for learning purpose. It may hurt many people. These are all not at all required. So how a person who is selling the option, how is he that before the trend formation, why is selling the call option, why is selling the put option? Okay, it depends. It only works when we are dealing with a what we call weekly options. Okay, I will tell you why and everything. Don't worry. Okay, so now the first rule I will tell you. Right. Option trading rules. The first one is important one. Never carry current week index only. Index option. Try to carry only next week expiry option. Simple. By this many would understand why I told this. Suppose this month, suppose 17th or 18th. Okay, now it is 6th, right? Okay, so you may be taking that next Thursday weekly expiry you are taking, but you are thinking that Nifty. I am giving one example. This is one option. This is another option. Consider this is a current week option. This is next week option. You may be thinking that from 17,000 it will be reaching to the target of 18,000. Here also. I am giving this example. This is your profit levels. Target levels. You know, everybody know it will not go anything. Right? Stock will not go anything. Or any index will not go anything. So for 17,000, when you want to go for a 18,000, what you do? You will definitely go for a OTM option. You will be taking just to have a less risk, and you will go with option value 17,500 current value. So any OTM you will be buying. So by the time when you want to enter, so you will be entering it here. Since 17,000 you got a prediction, you will be moving towards the 18,000. By the time you have taken, so what happened? So everybody started buying because it has made some breakout, and once the breakout is done, it has definitely asked to book profit by some of the people who was entered at the bottom of wave one, and it goes for a correction because it's a spring action. So until unless it has not made a spring loaded or gun not loaded, it will not go forward with it. The same way here also. So spring is loaded and it is come back and it is waiting for it. Okay, it is waiting for it. So because if it is directly hitting now, so how an option seller will make a money with this? So he will not give money with that. So you are just spending almost around 1,000 rupees for the same call option. But whereas the same for writing, you might have been spent almost 1.5 lakh rupees for writing this call option. Is he a fool to give you money? He won't give. So because he is having some convictions regarding the whatever the theta, everything I told, right? Whatever the time decay, time delta, gamma, whatever the things are there, it is in this side. Our side is only one thing is there, that is only the momentum, that is delta. Okay. Until unless delta is there and the momentum is not come, your delta will not go further and it will not give the money from here. Or because of this theta, whatever the time frame, whatever the time value, what happens? So neither it is hitting the target, neither hitting the stop loss. It keep on eating the money. Maybe Monday you might have taken, Tuesday, Wednesday, and Thursday. By the time it comes here, and it will be reaching here, maybe maximum. Okay, so it will be reaching into the place where your whatever the OTM call has taken from that place, it has come and it has been stopped. Okay, by the time what happens, 10 rupees ka start or 0 whatever the index, current week index you have taken, that will become 0 or maybe 2 rupees, maybe 3 rupees. But end of the day, it will be lost. I'm telling 90% scenario, not 100% scenarios, because many people are losing the money because of this weekly option expiry. Okay, now the same thing, if I have taken OTM of 17,500 for the next week, I know this move has to come. This goes with some higher response, and since it is the next week expiry, it doesn't have that much of some what we call fluidity and liquidity. And then what happens? Then it will be going maybe. I'm just giving example. By the time it has reached here, okay, by Thursday, and whenever these guys option becomes 0 on Friday, you just go and look after all the charts. All this and all is made a profit on the Fridays, and people will book right here. I started booking here again. It goes up. In turn, if you see exactly, this is 1, this is 2, this is 3, this is 4, and this is 5. It is also making pattern of here. Okay? So my information I want to share is that whenever you are taking the current week option, by the time before hitting the profit, it makes 0 and then it go forward. Okay? It will go forward because it has to give money for the option sellers and for next week option sellers. Because why many people will buy here? Because it is having the pro is less investment is required. Okay, what else? Why people will take here? Less investment is required and high premium decay is involved. Correct? These are the cons. High premium decay involved. And what else? Because if comes, they think that in less time I get profit. So this is a conviction, that is the reason. So this no, okay. Sellers knows your conviction. Okay, these guys don't want to put more money, they don't want to wait, they don't have patience. So we can hit with the momentum, we can hit with the data, we can hit with the emotions like they know, and they will not give money, and Friday only they will take it. Okay, and then here I accept it requires some bit high investment with respect to current week investment. High investment is required. Current week index option, but it has a less premium decay. You observe, okay? You can go and check the option chain, you can go and see any charts and that you will come to. And I also accept it needs some more time to book the profit. It needs some patience, but it definitely gives. Okay. So रहेगा ना dialogue. So आने का, but so definitely will come, but coming is more important. Coming is essential. Okay. In Telugu there is a dialogue of phone. So I will definitely come, but I don't know when come. But if I come for sure. Okay. The same thing here. This next week option will give money definitely. Until unless you have a patience, you know the conviction, when to enter, when to exit. Okay. This one I want to take it. Okay, this is the second step. If you want to take it, okay. Next one. Don't take stock. No, this is the stock. Stock option. Fresh entry. Sorry. On Friday or Monday. May I know the reason? Maybe thinking that sir, if you are taking the Friday, so I will be having the decay of Saturday Sunday. Yes, one point. What else? Any idea? You can text it. You can text in the chat. No idea? Well, let's wait. First, I will tell you about the Friday. Then we will discuss about the month. Consider this is equity. This is option. If equity goes like this, option goes like this. Because it impacted with only the momentum. Whereas option for the same respective strike price, it is impacted with the time decay and momentum delta. Okay. So when you take this option or when you stock option on Friday, we know as we discussed just now, we are having that Saturday also time decay where prices come down, and Sunday also decay, prices come down, and Monday, what happens on Monday? If luck is there, it may be reaching to a respective entry level, or else even if momentum has not come, if it's going in a further sideways, it just gone up and further making a correction in a wave 2, then here also it makes again decay, what else, and dip also is there because the momentum dip, it is further going down. So that is the reason it's better to take once the dip has come, and better to take entry in the weekdays, maybe Monday, Tuesday, before Thursday, anything is okay. But better take not to take on Fridays or Monday. Okay, this is the thing I want to share it. So many people are doing, because even though their stop loss is not hitting in the equity and they are booking the losses, and by the time they are exiting, their option prices are moving forward further again. And here I did this analysis, I will not exit. If I will not exit, I will not make the profit. The same meetings, but it become addiction. Okay, but always wait for a stop loss or stop. Okay. So now month end. Month end में क्यों नहीं लेने? Consider these are monthly can. I'm giving you the both examples. Maybe you taking for call option, you will be seeing the green candle. For put option, you will be seeing for a red candle. Here it is month close. Here it is a month close. It is a monthly candle. Okay. You know, for anything which has been gone up, it directly will not go forward. It has to take some, at least some correction, maybe up to 23%, maybe 38%, maybe 50%. The next candle will be taken from here. By the time you have taken a month in, what happens in the month end? So it needs, when it taken the for correction, so then it will not give you the profit. By the time you will be seeing the losses in it, then everybody started booking the profit. Maybe in this zone, 2 days happen, 3 days happen, 4 days happen, 5 days happen. Still the profit is not coming. What they will think, then we will look for some other thing. So it is going for a correction. By the time they exit, and this candle will boom like anything. But next month, if we see, this candle also forms like same green candle, how it is there. It forms like. They may think that, अरे यार ये तो सही है, but why I book the losses like that, they may think. So the reason is, so they don't see this correction. But when you go through the lesser time frame, as I told, this higher time frame will be telling the direction, and lesser time frame, it calls for a correction in the lesser time frame that you can able to see clearly with a wave. Whenever the confirmation comes, then you can take the entry. So by the time you can take the month end, this will have a impact with respect to the option, with respect to the time decay, with respect to the whatever the momentum. So it, and also it for correction and dip. So it goes for a loss. Okay. So don't take in the month ending. Once the fresh month has start, maybe after Monday, whenever you are seeing the respect to strike, with respect to start is in lesser time frame, making a new pattern, making the new wave, maybe wave 1 or wave 3. Then at that time you can enter. And how this bearish will work, the same way, the same like what we call bullish. But what happens? So whenever people will see here and they will be taking entry, by the time it hits the stop loss and again goes further and take the reversal. So it is the stop loss and again they can take the entry. From here again it will go further down. Same like that again now. They won't see this whatever the correction is happening. Okay, goes for a lesser time frame entry, not from the higher time frame. Even if you want to for investment, even if you want to go for that, whatever time frame you are checking, make it by 4. Suppose if you are taking for 480 minutes, by 4, whatever the time frame is there, that you analyze based on that, take the entry. So you will be get rid of all the corrections and time decay. Okay, so better take entry here. Better take entry here. No problem. मोमेंटम तो आएगा, जब तक वेव 2 नहीं होगा, until unless wave 2 is not come, it should not go wave 3, right? Suppose if it has gone directly from here to here, no problem. But if you see out of 100 stocks, everything it has to make with respect to the wave. Only the cases whenever the results, whenever somebody news or maybe any bad news comes, directly stock falls. But if there is no news, if everything goes normal, it has to follow the Elliott principle. 1, 2, 3, 4, 5 on the formation. Because why Elliott? I'm not telling because I'm the trainer of Elliott. So because it's based on the emotions. When people are taking the entry here, they always try to exit, book the profit. And whenever booking the profit, again it goes forward. And again people will enter it here and again making the profit. And at some certain time, they will start exiting from this respective call and they will be looking for some other strike, some other stock, some other index, okay, right? So again, it will be going for a reverse correction and then again further faster. This is how happens. Okay? Yeah, you can take this screenshot. No. Third one. Never look option chain with lagging indicators. See, option chain is formed with respect to the highly advanced technology. So why it happens? If you see, if any stock wants to go up, what they will do? People will write put options, right? So then the stocks will go up. Or else they will be adding more call options. So if you see how these put writers are coming whenever it comes to the wave together, I will tell you. Wave 1 is formed, wave 2 is formed, and here whenever you see Reliance 2200, this 2200 put option started writing more and more, and you will be seeing, you will be understanding that some put writers are there being more. That is the reason. So it will be going further over like that. They will be thinking, right? So how these guys is knowing? Because they have some advanced prediction, but they don't follow the what you call lagging indicators. But what we do, we open the zero the chart and we see the option that is data insights from the leading indicator. We apply the which concept? SME, super and super trend, and EMA, RSI, MACD. When we apply, we think that it is going against why these people are coming and buying, selling this one, this put options. Okay, you may be think and you will not have a conviction. So better you work with a leading indicator. That's it. So if you make the proper accuracy, if you want proper accuracy with a small risk and high profit, better go with the leading indicator. This lagging indicator works only for the investment. You can take it for maybe 1 weekly, yearly, and quarterly. When you see that, then only it will up this one, whatever the lagging indicator, CME, HNS is. Okay, don't combine. Many people will confuse. Sir, I have seen option chain and you also think that MACD is going down. So what should I do? Because you are taking two different strategies together. Don't mix. Then fourth one, as I already told in the time frame. So never keep option based SL. SL is based on spot price only. You got it? So as I explained earlier, this equity, this option, equity may correct here, maybe 70%, maybe 80%, maybe 60%, whatever it may be. But this option may correct up to here. No need to worry, even if it is sitting here until your stop loss is not hitting. This bottom swing low. It goes further and it goes forward also. End of the day, it's both are common. It's reaching, okay? Because all together it has to make the balance. Theta, vega, gamma, delta, everything has to be balanced. So then only the OTM, ITM will go together. Okay? That's the one. As I told, option sellers are always enter it before trend starts. Okay? They have a highly prediction because they follow the leading indicator. Option sellers follow leading indicator. They sell before trend starts. Don't confuse with this statement. Since it is PE selling, there is a reason, so I will be it. But how if you see the lagging indicator, you will not get a conviction. You will not be getting the idea. Okay? Either follow the leading or lagging. And many people are thinking whether I need to option buying sell or hedge. Many are having this doubt. Which one need to do? I will tell you. So first I will give the theory, then you will only tell me which one is better. Okay. This is option buying. This is option selling. This is hedging. Suppose Reliance 2200 CE. Got it? 10 rupees. What is this risk? 10 rupees max. What about the reward? Unlimited, right? Reward is unlimited. What about option selling? Reliance 30 rupees. What about the risk? So whatever the profit will see. Reward maximum 30 rupees. What about the risk? Unlimited. Simple, right? If stock goes forward, maybe 2003 500 points will be your loss. If any good news comes. No. Option buy, option sell. Other put option buy. Take it anything. C bought at 10. P bought at 20. Now in this scenario, minimum 30 points of stock movement is required to make break even. Right? Until unless this whatever the call or put option is taken, 30 points is gone, then out of the money call will become in the money, and then that will start giving the money. For that, it has to contemplate towards the put option, because you bought for put option that 20 rupees, and if it is comes 30 rupees, then only this what you call call option becomes 30. Then only you no loss or no profit zone. This is a break even. Okay. If you need a profit, for profit, stock needs to move more than 30 pence. So these are the basic things anybody knows. But what is our inference now? Okay. The inference in the option buying is here less investment, less risk. You just need to put some effort on the correction in the yield. correction in the wave. Whenever wave 2 completes, then you enter. Whenever the wave 4 completes, then enter. Just effort is needed to identify trend with the momentum. Trend plus momentum. When you catch this one, it will become a 2-2 task. As I told you earlier, right? It will become a to-do only. It's not a project. It doesn't require any critical thinking. Okay? Because I know it has been completed a correction in the next higher time frame. Wave 1 complete, wave 2 complete, and it's taken the correction and it's made a reversal. Then I will be entering in this zone, in this part. I may be entering it here, but I exit, anywhere exit, no problem. Because my stop loss is very small. If stop loss is in this part, I will exit. That's it. So almost by the time I will be losing maybe 1 rupee. That's it. Okay. But what if I hit for a towards the momentum, towards the trend, then I will be getting more. Right? Because also having the I don't need to worry because whatever the market goes, whatever the meeting goes and all goes on for me. So I don't need to look after the chart. So until unless it makes stop loss is not hitting, so I will be having the less risk. My reward is unlimited. But what if I do the inside? I do the inside of the option setting? Here, more investment and profit is lesser, limited profit. What if? So investment is more and profit is less. Why to take this risk? And we will be having the unlimited risk. Okay. So we never ever go with the selling until unless we have a particular proper accuracy system with a small risk and high reward. So you don't need to be worried. And in hedging, so in call option you might be booking the profit, and in put option you might be booking a loss. Suppose until unless there is a trend. Suppose bullish trend is there of a stock, it is going like this. So you may be booking the profit. Okay? But what if the market goes in a sideways? It's neither hitting the target, neither stop loss. So either these both will become zero, or else altogether price maybe comes to the 10 rupees or maybe 5 rupees. Okay. This hedging is important when you are having the bulk amount of stock. Suppose you are holding 10,000 stocks of Reliance. You don't know the market condition tomorrow. So better take 10 lots of put option so that it is out of the money. So that even if a Reliance stock comes down, your put option will bring the money. Okay. It's like one of the taking the insurance, taking the term insurance, taking the health insurance, like how you take it, right? The same way, when you are having this bulk amount of stocks with you, then only go for a hedging. Until unless you don't have any capital or anything, so don't go for a hedging. Hedging is suitable only for to safeguard your whatever the stocks you have taken. See, hardly if I lose 5 rupees of OTM call, I don't for OTM put, I don't worry when I am having 10,000 of Reliance. If it comes down, suppose my Reliance comes down 500 points and my put option brought 400 points. End of the day, I will be losing 100 points. Like this thinking will be there for hedge traders. But if I don't have any Reliance underlying stuff, but end of the day, if I am taking the hedging, so it makes no sense. So I am making the profit in put option. I lose the money in the call option. It doesn't have any value. So even you can make with a small option buying or option put option buying or put option call option buying, right? So make this conviction and take proper analysis with respect to the lesser time frame or maybe higher time frame, whatever the time frame we will be seeing. When the correction completes, when the new wave starts, better go with my suggestion is go with the option buying when you know the proper trend direction and momentum. Even when you add a small thing here, when you add it, what do you call the, I'm not getting words, trade management. So when you have a trade management, you can each and every play, you can do it. Whenever the move comes, you can entry and exit everywhere. You can play like anything. Just we have launched this momentum indication. So whenever this moment comes, this we will be getting the whatever the signal, and whenever this what you call entry and exit is there with respect to respect to the option. With respect to the trade momentum, we have introduced also this trading momentum option we have introduced so that your option will not go for a zero. So this is what advanced option mastery we have introduced in options. Okay, for that we are going to add some two new indicators for that so that it will give you a prediction, okay, that we have recently launched. Okay, so if you want to take the screenshot, you can take it. What else? I like told about the psychology. This is what, right? Psychology, how it will be there. Now we will also add some psychology, bit more. We'll be discussing now.